A very good morning to one and all. The topic for the day is cash management. This topic is applicable not only to so-called MBA professionals but also to a very small kid. Because finally, how are you managing your cash? That is the question. But the intensity of management or the rigor or the importance or the reliability increases when your business increases. So from our framework, we will be focusing mainly on business models, but this we will try to touch upon even the smaller version, so-called kid, how he or she is managing cash. Let's go to the first bigger picture, then in between we will try to fit in smaller things. Let's have a quick introduction on this area. As far as working capital, please note WCM means working capital management. If you are taking an operation specialization, there is a subject called world-class manufacturing. So please do not get confused with WCM as world-class manufacturing. Now, even if you are taking world-class manufacturing, there also cash management is important. But our topic is working capital management. In that, the most crucial, let me put it that way, or if you put a rank, cash management ranks 1. The question is why? The answer to that question is cash is the most liquid asset, which means if you have cash, you can either purchase or you can invest or you can transfer that cash to something else in no time. Now, what is the issue in that transferring? The issue is all process in working capital management. That is, you remember very clearly we had earlier sessions on inventory, we had earlier sessions on receivables. All these items or all these segments finally boil down or finally come down to one aspect called cash. This is very simple sense. The point is, even for a common man, for example, I am a small person selling snacks in a very ordinary tea shop. Why am I making snacks? The answer is to get sales. Why? What am I going to get by increasing the sales? It will lead to cash. So for making a snack, I might require sugar, I might require milk, I might require wheat, I might require some flavors. All these things are my inventories when I make it. Now, when I buy sugar, I have to pay cash or I have to buy it on credit. All those are raw materials individually if you take. So if I convert or if I use a proportion of sugar, a proportion of wheat, a proportion of milk and some flavor, I will get a finished product. Now, when that finished product is in my godown or in my tea shop, it is called inventory. When I sell it to one person on cash, finally that is sales and the fund is coming back to me. So wherever we have discussed till now, the ultimate answer is cash. So the next important question is, what is the issue if you have a lot of cash? Now, before we answer that question, we should also understand from a business perspective, from a larger dimension, cash includes two things. One, it is hardcore pure cash. The second one is called cash equivalents or so-called marketable securities. So you can take this topic or this section in two views. But I would request you, as I told you in the beginning, we are going to concentrate on organizations. Organizations take it in a broader sense. Now the question is, can you define broader sense? Broader sense means that is where you include cash and marketable securities as liquid assets. Therefore, what is the opposite of that? The opposite of that is narrow sense. What is narrow sense? You include only liquid cash, that is real cash. What do you mean by marketable securities? You will have a question, I'll answer that just in the coming sessions. Now, let us first deal with cash and then move on. So what is cash for a layman? This is the ready currency, which means if you have got a 100 rupee note, that is a ready currency. The value is 100 rupees. How that value is 100 rupees? Now you should open, I am sure you have done this, open that note and see a declaration by the RBI governor. That is where the value of currency is. So if it is a 1000 rupee note, you can see the declaration. So that declaration indicates that the value of the currency is this much. It's the, whatever, 1000 or 100 or whatever it is. Now if you have a US dollar, their Federal Reserve declaration is there. In India we have got RBI declaration because Reserve Bank of India is the apex bank. So cash is the ready currency or on the dot currency. What is the ultimate aim? To which all liquid assets can be reduced. So this is a funnel type concept. Have you seen funnels where you pour, I don't know whether in your age have you gone to a ration shop. That is one area we should all understand because India's most beautiful public distribution system starts from ration shop. So if you go to a ration shop or a small shop where you are given kerosene or where you are sold oil in small versions, not packet versions. So what you say, you want say 5 liter kerosene, you have to give a dabba or a can. In that can, the person in that shop will fill. What is he doing? He is having a liter cup or a measure and he is using a funnel. And what is the beauty of the funnel? The top surface is broad, but the narrow surface or the bottom surface is thin or narrow. This is exactly cash. So what we said, inventory, receivables, marketable securities, all are in the top area. But what are they finally coming down to? Finally they are coming down to that nozzle or that dip of the funnel which is narrow or the one shot, that is cash. All areas can be converted into cash. That is the objective. Now, what do you mean by near cash equivalents? I told you marketable securities. But what is that? The first information which you should have is that is also highly liquid, which means it is almost equivalent to cash. That is why, for example, in your balance sheets or in your financial statements, you use a word called cash and cash equivalence. Equivalence means equal to. So that is the reason why marketable securities is included as liquid assets, because it is closely associated. Now, tell me, you can ask a question, please tell me clearly what is marketable securities. The answer is here. Marketable securities are, point number 1, short-term instruments or short-term interest-bearing instruments or interest-earning instruments. What instruments? They are money market instruments. Which people or who are using that? They are used by organizations or firms. Why are they using that? They are using because they have temporary funds which is idle. So in order to utilize that temporary funds, remember it is not permanent, temporary fund which is idle, you are investing in money market securities. So 4 points comes for your question, that is, what do you mean by marketable securities? The first information is these are securities which are marketable. Now you want a more broader definition. The first one is they are short-term instruments. Second one, they are interest earning instruments. Third one, they are money market securities which firms use. And why are they using? They are using because they want to invest their temporary idle funds. So these are the 4 indicators how you define a money market instruments or marketable securities. Now you might say, okay, now I got an idea that I understood what do you mean by cash. I understood what is near cash equivalence and cash. Next, I also understood the criteria or the characteristics of marketable securities. But still, you might not be able to get a feel, why are you holding cash? What is the importance of cash in business? That is called motives for holding cash. Motives means why are you holding? What is the purpose? First one, there are broadly four. First one is called transaction motive. The English language directly tells us what do you mean by that. The motive means the purpose, and what is the purpose? For doing transaction. Therefore, in this case, the organization or the business hold cash and marketable securities in order to finance transactions in the routine business operations. I repeat, the business holds cash and cash equivalents, which means broader sense, that is, it includes marketable securities. For what? For their financing requirements. What is that? Transactional requirements, day-to-day routine activities. So this fund or this cash is used to manage their day-to-day activities. Probably there was a latest news where the aviation or the low-cost airlines has submitted a proposal to the aviation ministry asking for charging the luggages. That is, you are allowed to take 20 kgs free in a flight, but more than that it is charged. Now the low-cost airlines want to make money, so they put a proposal, but as far as the newspaper is concerned, the aviation ministry has rejected that. They said it is burdening the customers. Now think why the low-cost airlines has taken such an initiative. The answer is, if they are able to generate further cash, that will be helping them in their transactional purposes. I mean, I just heard, I am not sure about it, the average salary paid to a pilot roughly comes to 5 lakhs per month. On an average I am talking. There are senior pilots who are paid even 20 lakhs a month, and their flight hours, all these things are very strict, because it is a huge risk. If they take some strain and work on, they are risking roughly 300 passengers if it is an Airbus, plus the cost of the flight, that itself comes to million rupees, plus the damages. So aviation company, I mean the flight company or that so-called SpiceJet or Jetlight or whichever it is, they are very careful in designating, and there is a rule that how many hours a pilot should fly and all. Anyway, that is out of our scope. What am I telling you is, companies or business try to squeak, try to get in. What are they doing? To extract further cash from the customers in the right sense, not by exploiting them. Why are they doing? Because one of the motive is they want to run their transactional business smoothly. So this can be one of the reasons why the new proposal has been put forward, but however it has been rejected. The simplest example are, what do you mean by transactional expenses or transactional routine activities? The examples are payment of taxes. You have to pay taxes to the government on a clear basis, because whatever revenue you are making, you are eligible to pay tax on the specified slab rate. Next, dividends. You have taken money from shareholders and started this company. Now there is a minimum responsibility to share the profit. When you share the profit, it is called appropriation of profit. The terminology used for explaining that, it is called dividend. Another routine activity is payment of salary to employees. What happened to Kingfisher Airlines? Exactly the issue. Kingfisher Airlines could not even pay the salary for 12 to 18 months. The problem is they never had cash. They had cash but in some other forms, and they had borrowed more than what they had. So this resulted in inability to manage their transactional motive. So this is one issue if you do not have cash.